Let's get back to oil. U.S. President Trump coming out with optimistic remarks on progress about a peace deal between the Kremlin and Kiev. Our guest says, though, for the moment, America will probably maintain current sanctions on the gigantic Russian energy producers Rosneft and Lukoil, and could tighten sanctions on Russia next year. Let's welcome Bob McNally, founder and president of Rapidan Energy Group. Bob, great to see you. You are skeptical that a peace deal can be reached in Ukraine in the near future?
Hello, Andrew. Yes, we remain skeptical. Now, you have to give credit to President Trump for aggressively pushing a dual-track strategy with Russia. On the one hand, increasing sanctions pressure on Putin. And the market, the oil market, was very surprised when President Trump in late October imposed sanctions on Lukoil and Rosneft. And since then, we've seen the value of Russia's benchmark crude, Urals, fall relative to Brent. Those sanctions have started to have an impact. But at the same time, as we've seen more recently, President Trump is pushing the diplomatic process. So it's very much a push on both tracks to try and get a deal done. And a president, we say, you can't always get what you want. I think he strongly wants to see this war end. However, in our view, we don't think Putin and Ukraine and Europe, on the other hand, are anywhere close to a settlement, to a sort of an agreement or a framework for a compromise. So we're unfortunately skeptical that this will pan out. We're more likely to see weeks of up-tempo negotiations continue. Drafts go back and forth, but we're skeptical we're going to see any kind of a breakthrough here shortly.
In theory, a peace deal is bearish for oil, isn't it? Because it would free up more Russian crude onto world markets.
A little bit, though. I wouldn't overdo it. Remember, we haven't lost that much Russian oil in terms of the production and exports into the world. What we have done is reshuffled where Russia sends its oil. There's been a much bigger impact on Russia's gas flows than in terms of oil production. So if there were to be a peace deal tomorrow, and let's say all sanctions were lifted on oil, I don't think there would be a big drop in oil prices, a few dollars a barrel. That being said, we think oil prices are heading lower as this oversupply we've been talking about in recent months develops. So the direction is down, but a unlikely peace deal with Russia, I don't think is that big of a deal for overall Russian production and therefore overall crude prices. It'll help Russia be able to sell its crude more competitively on global markets.
So you do see surpluses like many other observers, although it could ultimately flip the curve back into contango, and that is, in theory, bullish for oil, contango.
Well, contango is usually a sign that we have excess supply and that the owners of inventory space are being compensated by that contango curve to fill up their oil. So normally, not always the case, but normally contango suggests we have surpluses. And, Andrew, flat prices of crude and the curve has been moving sort of down. We've been moving from backwardation since the summer toward contango. Not quite there yet. We were in contango briefly in the front of the Brent curve just before President Trump announced those sanctions on Russia, and it popped higher. So we are seeing, both in flat price and the shape of the futures curve, a trend toward a softer market. But then we do see these geopolitical headlines which cause these spikes. It could be the Israeli-Iranian war in June, Ukrainian attacks on the Russian energy system since then, and then sanctions on Russia.
What about, you think that Israel may attack Iran again, presumably going after their nuclear facilities, but the exchange of missiles and bombs between Israel and Iran this year didn't result in a spike in oil.
That's right. It was quickly followed by a truce, a truce negotiated by President Trump. So that is why I think that it did not result in a loss in Arabian Gulf production or flows, no damage to energy infrastructure. So this spike reversed. One thing, Andrew, we've talked about it before. Since 20. Smart money is to sell or bet against a geopolitical disruption. They usually don't materialize. So the market is quickly to sell a spike if it doesn't materialize. That being said, we think there's at least 70% odds that Israel will attack. It could be Iran's nuclear facilities, also its missile capabilities, both of which it is reconstituting. And in recent days, there have been reports of aggressive testing of Iran's air defenses on its borders, possibly by the Israeli and maybe even U.S. forces. So we think toward the end of this year, early next, we're going to have another round of conflict. Again, we would assume unlikely to see major oil supply interruptions, but another round of conflict is coming, unfortunately.
Bob, we're taking a tour of the world here. What do you think will happen with Taiwan and China? Is that inevitably going to heat up, or is that a slow burn story?
I think it's a slow burn story. What's going on in Beijing has just been fascinating since the summer with the plenum and the purges and the change in direction. And what we hear and understand is that China wants to take a softer course vis-a-vis President Trump, vis-a-vis the trade disputes and Taiwan. I do not think that China's leadership, not just Xi Jinping, but those other powerful forces in Beijing, liked the direction of travel. Antagonism towards the United States, sort of a big ally of Russia, pushing the electric vehicles at all costs. I think you're seeing a shift across the board in Chinese policy, including on trade and Taiwan and electric vehicles. And it's one toward, I think, pragmatism and trying to dial down these tensions. Longer term, Andrew, later on this decade, there's probably going to be a problem with Taiwan. It's a difficult problem between China and Taiwan, of course, and our allies, the United States, Japan especially. So wouldn't rule out that we're going to have a crisis down the road, but near term, I think the tensions are going down.
Bob, we'd better leave it there. I was just looking here. Apparently there is such a thing as a bullish contango and a bearish contango. And we can't get into the weeds here. But your take is that there's certainly signs of a glutted market, at least over the next few months.
Absolutely. We've seen bullish contango before. Let's talk about it another time.
Sure.
But near term, I think contango would mean that oversupply is arriving.
Bob, thank you very much. It's always great to hear from you. Bob McNally, founder and president of Rapidan Energy Group.